Hello everybody, welcome back to my channel. If you have been following along, if you're subscribed to my channel, which if you aren't, I highly encourage you do now, you'll see my prior two videos on Ken Griffin and Citadel. I will include them in the video description so you can go back and watch those prior to watching this one, but we do have kind of a bit of an update here. People have been asking, like, when is the SEC going to investigate Citadel, Ken Griffin? They allegedly began an investigation, I believe, in 2021, but we haven't heard anything about it. What's the status of it? We don't know. But we have gotten something from the SEC that I found just absolutely ridiculous. So this is from Unusual Whales on Twitter. Breaking: Ken Griffin's Citadel and several other hedge funds have been asked by the SEC to search through the employees' devices for evidence of business dealings on unapproved channels like cell phones. So what the SEC is doing here is very cute. You know, it's like, we're going to ask you to investigate yourselves. Not only are we going to tip you off into what exactly we're looking for evidence, but we're going to ask you to police yourselves. So the SEC has asked the hedge funds, hey guys, can you guys investigate yourself for any maybe wrongdoing and then let us know? Is that what's going on here? I mean, that's just kind of ridiculous and silly. It also kind of gives, it's a signal to Ken Griffin at Citadel, like, hey, why don't you look for a scapegoat? Or, hey, this gives you a chance to have your employees get different cell phones, replace their phones, hide the evidence. I don't know. It's just really ridiculous. And honestly, it's fascinating to me that white collar criminals get treated differently than violent criminals. And they may have a bigger impact, like a bigger victim impact. If you are a violent criminal, the ability for you to impact a lot of people is limited to whether you become something like a mass SHOOTER, if you know what I mean. But typically it's limited to people around you. If you're a white collar criminal, like these hedge funds, your victims are spread out around the world. There are so many people that are impacted by your fraudulent activities, that get bankrupted, that lose everything. It is a much bigger victim count. So it's always interesting to me how they get treated like with kid gloves. You're never going to see Ken Griffin frog marched out of a building in handcuffs. It's not going to happen. Here's the Bloomberg article, though, about the SEC and what this is in relation to. And I always include the links to my sources in the video description. So if you want to look at that more in depth, you can, and you just can see where I get my information from. SEC WhatsApp probe expands to phones of hedge fund employees. Point 72 in Citadel among industry recipients of request. Officials seeking evidence of business on unofficial platforms. So this is from today, by the way. Major hedge funds have been asked by U.S. regulators to review certain employees' personal mobile phones as part of a mushrooming probe into Wall Street's use of unofficial messaging platforms like WhatsApp to conduct business. Again, this is sort of like saving face, okay? The manipulation of the market is so blatant, it is so obvious, and it's so egregious. I feel like the SEC needs to look like they're doing something, so they do this sort of performative, pretending to taking these people to task, which we know isn't happening, So they're like, Ken Griffin, Citadel, Steve Cohen's Point 72, and some other firms, we're just asking you just look for evidence of business dealings on unapproved channels. What? The SEC is also probing the practices of brokerages, money managers, and private equity firms, and we can expect this to be nothing other than another shakedown. Citadel, I believe, has been fined by the SEC 59 times, if I'm not mistaken, so it's sort of like nothing really changes, nothing really happens. They just kind of make it look like, oh, we're doing something. These people get a little slap on the wrist. It's just like paying your shakedown money to the mafia. They get their cut. The SEC gets their cut. The agency under Chair Gary Gensler have made the issue a focus, arguing that business conducted outside of the view of a company's compliance department can make it harder for the regulator to investigate potential wrongdoing later. The SEC has already fined banks more than $1 billion for violation. So again, this is just a shakedown. They're not actually going to change anything. They just need to make it look like that's what's happening. Okay, so let's move on. You can read the rest of this article on your own, but that's the gist, is kind of giving these people a heads up, you know. This was another interesting thing that I think is pretty much related, so I wanted to include it in here. New York Stock Exchange glitch caught up in fight over SEC rewrite of trading rules. Last week's glitch at the New York Stock Exchange has become a pawn in the ongoing battle over a rewrite of stock trading rules proposed by U.S. regulators. Yeah, okay. The manual error, which caused wild market swings when trading opened up January 24, is now being cited as an example of why more trading shouldn't be pushed onto exchanges such as NYSE and NASDAQ. Major broker-dealers Charles Schwab and Robinhood contend that the incident was a reason for concern and an argument against exchange-run auctions. Quote, if exchanges will not accept accountability when they make an obvious mistake, it further heightens our concern that routing even greater levels of retail orders to the exchanges will dramatically reduce the quality of the investing experience for America's retail investors, Charles Schwab spokesperson Mayora Hooper said in an emailed statement after the mishap. Well, I mean, let's get real too. They also have products like designed to kind of benefit from retail investors using them, right? Same with Robinhood. You know, just putting that out there, like, okay. So anyways, this is what's supposedly happening. The SEC should not be playing politics with individual Americans' ability to improve their financial lives, Lucas Moskowitz, deputy general counsel at Robinhood, said at the time. Right, so like, oh yeah, we care about the regular American, you know, and their financial future. Okay, not buying it. Now, this video I thought was fantastic. Give me 1 second here. And I'll just kind of read it. I'm not going to have the music playing in the background because, you know, we have to worry about getting copyright struck for everything. I'll turn that off, but I'll just play the video here. This is the Citadel scandal video. Meet Ken Griffin, the CEO of Citadel. He's got the crazy eyes. Ken's company, Citadel and Citadel Securities, are both a major hedge fund. Citadel pays brokers to get information about orders before anyone else. This gives them a big advantage, which you might call insider trading. Yes, exactly. Ken's companies have been fined numerous times for breaking the law. Fines, which are a tiny fraction of the amount they've made. 100% true. Yeah. Ken Griffin has donated hundreds of millions of dollars to politicians of all parties over many years, of course. Yeah. Friends with Bill Gates, too. Yeah. In fact, some might say Griffin is buying protection from politicians. Yeah. Oh, like they all do, you know? Then on January 28th, Citadel and Robinhood declared war on retail investors. This is January 2021.
Oh, Gretchen Howard messaged internally that Robinhood had a, quote, major liquidity issue. Tenev, of course, denying that in an interview with Andrew on CNBC. And that same day, Robinhood did move to close down some of the heavily shorted stocks like GameStop and AMC to position.
We all remember this.
Close only, meaning people could sell, but they couldn't buy.
Robinhood stopped retail investors buying certain stocks. Indeed. They literally manipulated the market so that the only way it could move was down, just the way Citadel wanted it. Citadel had huge positions against the stocks. Yeah, they did. Retail investor Apes answered this call and simply held and refused to sell. This cost Citadel and others billions. They're not happy about it. The government held a hearing, quote unquote, on what had happened, calling on Ken Griffin and others to testify.
Well, I understand that, but did you talk to them about restricting or doing anything to prevent people from buying, not selling, but buying in GameStop?
Let me be
anybody in your organization.
Let me be perfectly clear. Absolutely not.
That was a lie. But documents from a court case appear to contradict this testimony. If this is so, Griffin lied under oath to protect his financial interests, which we know he did. The official report commissioned by the SEC chair failed to address any of the issues. The regulators swept it all under the carpet. Nothing to see here. There's Gary. Yes, that's what happened. And now he's doing it again. The system is rigged by powerful players who have bought off the politicians, regulators, and the media. Oh, exactly. Griffin doesn't care. He just wants to keep the money flowing. Yeah, we see you, Griffin. We do. And you will be exposed. Let's go. Let's go. Okay, so moving on here. South Korea fines Citadel for stock algorithm trading breaches. Yes! South Korea's financial regulator has imposed a fine of 11.88 billion won on the US-based Citadel Securities, saying it disturbed the local stock market with high-frequency algorithm trading. The Financial Services Commission said in a statement released Thursday the firm had distorted stock prices with artificial factors such as orders on the condition of, quote, immediate or cancel, and by filling gaps in the bidding process. The firm carried out such trading on an average of 1,422 stocks per day from October 2017 to May 2018, totaling more than 500 billion won worth of trades, according to the statement. The commission said it was the first time it had imposed fines on such high-frequency trading on the South Korean stock market, which has a high proportion of retail investors and little competition among algorithmic traders. It added the firm did not provide algorithm source codes in the consultation process. The regulator declined to identify the brokerage in violation, but Citadel confirmed it had been awaiting a decision, although it had yet to hear directly from the commission. Yes, exactly. So they were fined for that. And then I thought this was fascinating. The Citadel empire revealed 500 plus entities linked to Ken Griffin, all from public records. I have built the edge of the puzzle. Can you help me fill in the middle? P.S. Ken Griffin is still a butterfly lover. So this was from the Super Stonk Reddit subreddit here. He says, you may remember my posts over the last year plus about the Citadel empire trying to untangle the spiderweb of companies Ken Griffin has created. I made ownership diagrams and did deep dives trying to understand the why and how Citadel is structured. There are endless rabbit holes, and I had to put some boundaries on the project, so I simply started compiling a list of everything I've found. That's all this post is, the list. This is in no way all-inclusive. Also, one of my first posts claimed Ken Griffin was a butterfly lover because I found a red admiral trust of his, which is a type of butterfly. He likes butterflies even more than I thought. That's a little bit creepy, just saying. I review thousands of public records from government regulators, corporate directories, county records, and property ownership databases to identify any evidence of a business or assets linked to Ken Griffin. I have many more details, but didn't think it made sense to post all that right now. Ask if you want to see a particular on any entity and correct me if you see any mistakes. I made sure to find evidence directly linking any of these entities to Griffin. Just because a business has Citadel in the name does not necessarily mean it's related to Ken Griffin's Citadel. A particular help were SEC filings and FINRA broker check and Form ADV reports, these self-disclosed affiliated companies, and describe the ownership structures. If you don't see a source for an entity in this list named Citadel, it is one of these. At one point, I was just getting down as many names as I could. Another source, the National Futures Association, has long lists of self-disclosed active and ceased pools. i.e. funds run by Citadel advisors. There is a link there. I used other links to identify these entities, business addresses, signatures on documents from key lieutenants like Gerald Beeson and Steve Atkinson, and other enablers on documents like lawyers who exercise power of attorney for real estate transactions. But this list won't include everything I have found. I'm not going to dive into details of Ken's family. I'm not going to show you where his sister and brother-in-law's yacht is docked. Blah, blah, blah. You may find these things interesting. They are leads I follow, but they're not in the public interest. The focus here is Citadel, its eye-popping corporate structure, and the personal assets Ken Griffin is accumulating. A number of these assets have not been reported in the media. I believe there are many more entities than what I've compiled, especially overseas. My focus has mostly been US-based with those records I am familiar with. So he's asking for help here. He said, the entities highlighted in yellow. I can link them to Ken, but I don't know their purpose. Do you know? I found many companies scattered around the globe. There must be more. What are they? Ken Griffin has spent an incredible amount of money on art. What entities hold it? Ken Griffin has donated hundreds of millions to universities, museums, etc. I have only researched in detail his contributions to Harvard, which revealed a Cayman Island company through which the donations were made. What entities were used to make donations elsewhere? Ken Griffin is one of the biggest donors to U.S. politics in recent years. As reported in the media, are there other dark money contributions he's made, and how did he make them? You know, this was a big thing with Sam Bankman-Fried as well, donating money to politicians to buy them off. A lot has been made by the media about how Ken Griffin spends his money, but who is giving Griffin their money? Who are the pension funds, family offices, sovereign wealth funds, etc. that gave Citadel Securities their money? And how much and when? Are there feeder funds that invest with Citadel, and who operates them? So he's got a text file there. He has an Imgur set up. So this is the Citadel Empire. And this is just a massive list. He said over 500 entities linked to Ken Griffin or Citadel. I mean, this is crazy. Let's just watch it scroll, guys. Let's just watch it scroll. This is kind of like insane. It's a lot. 530 companies here. Wow. Yeah, imagine what's not public. Okay, so butterfly themed entities found so far. Just so creepy. Oh my gosh. Okay, so yeah. All right, let's move on. Finally, we'll go to the last article here. How do hedge funds manipulate the stock market? Hedge funds have been manipulating the market for decades, but it wasn't until now a community has risen to raise awareness of market injustices. So yeah, I mean, I wouldn't call it a community, but it is what it is. Hedge funds have an incredible supply of short shares available to borrow. This advantage has allowed them to manipulate a stock share's price by initiating short ladder attacks. While supply and demand are pushing a stock's price up, hedge funds short the stock using an insane amount of leverage. This predatory strategy has yet to be announced as illegal, nor has it been addressed by the SEC. Gee, I wonder why. Hedge funds and market makers are getting away with being able to trade and swap stock in foreign exchanges where the stock's price isn't required to be disclosed. They're taking retail orders and, in a way, manipulating the circulating supply by not reporting accurate transactions. We've seen this happen with Barclays. Reports by FINRA have been made public, detailing multiple fines on Barclays for inaccurate books and records. Barclays is one of Citadel's clearinghouses. Off-exchange trading where transactions aren't displayed on the list market, such as the New York Stock Exchange, is a massive problem the SEC is still trying to figure out. Though the SEC is trying to implement the delimit order that will allow stocks to trade under IEX, they're having trouble from hedge funds and market makers. Citadel has sued the SEC on this matter. We have yet to receive a public update on the case. AMC and GameStop have had an incredible amount of failure to delivers. These are orders that have not been executed in options and are usually a result of a short parlay, not owning or not having all the underlying asset. This has led retail investors to the educated assessment that synthetic shares are floating in the market, shares known as naked shares used to short a stock. According to Investopedia, quote, despite being made illegal after the 2008-9 financial crisis, naked shorting continues to happen because of loopholes in rules and discrepancies between paper and electronic trading systems. Naked shorting has gone mainstream, with CNBC's Melissa Lee and Fox Business's Charles Payne bringing light to this predatory practice in the market. Retail investors must use their voice to address these issues to the SEC. The use of mainstream media outlets. According to The Fool, you should invest in this or that instead. We've seen headlines countless times. The Motley Fool is a source that provides its subscribers with handpicked stocks with potential gains. With tremendous respect, stick to what you do. The integrity of this company is to help investors pick winning stocks, not to divert them from a stock due to its potential upside that can cause hedge fund partners to lose billions of dollars. Yes, exactly. Okay, so manipulation in the stock market. You've all heard of the Robinhood scandal. This is another form of manipulation in the stock market caused by the halt of buying power. Robinhood prevented its users from buying stocks such as AMC and GameStop during GameStop's bull run. Although restrictions aren't as tight anymore, we're beginning to see trusted and beloved companies get exposed as hedge funds' worst nightmares become a reality. Today, we're seeing more people learn about how the stock market moves. If more of the public is to understand how hedge funds pose a risk to our economy and businesses, we must expose these financial institutions for who and what they really are. Okay, so we'll move on. That's the end of that. I just wanted to cover how the SEC is kind of giving Ken Griffin a heads up and other hedge funds and trying to get them to either find scapegoats that they can give a slap on the wrist to, or giving them advance warning to destroy evidence linked to their financial fraud and misconduct. So I'm interested to hear your thoughts on this. Do you think that the SEC actually does anything? Do you believe that they're all bought off like many of the politicians that are bought off by these bankers? And what do you think about Ken Griffin, Citadel, and our ability to rein in their misconduct? Because they have constructed a house of cards that will fall, and it will be the average American, it will be the poor person that ends up having to pay the price. Not Ken Griffin, not any of these hedge fund CEOs. They're not going to pay the price. They're not going to suffer the consequences. So it comes down to the average person, and it will affect them. And that's why I think it's important, and that's why we need to talk about it.